Every day, thousands of traders enter the market with a perfect plan, but only a handful actually follow it. The difference isn't their strategy, it's what happens in their head the moment things go wrong. Meet Absalom. He's been trading for 2 years, read 47 books, watched 312 YouTube videos, and has 3 monitors that make him look like a NASA engineer. Yet, somehow, he's still broke. And it's all because of one tiny emotion: fear. Our story begins on a Tuesday. Absalom spots the perfect trade. Every indicator is aligned. RSI at 30, volume spiking, support level holding strong. This is what traders call a high probability setup. He enters with $1,000. His stop loss is $50 away. His target? 200. A beautiful 1-to-4 risk-reward ratio. And then, fear walks in. Within seconds, his heart rate jumps from 72 to 115 BPM. His palms sweat, his stomach tightens. Did you know? A 2019 study published in the Journal of Behavioral Finance found that traders' heart rates increase by 60% when they're in losing positions, even if the loss is only 1% of their account. Here's where it gets interesting. Absalom's stop loss is at $50, but at $15 down, his brain starts playing tricks on him. Your brain hasn't evolved past its ancient survival code. It treats a $15 loss the same way it treated a charging lion, like a mortal threat. In that state, you can't think clearly. You can only react. So he exits manually at a $15 loss. And then he watches, helplessly, as the price reverses and rockets to his target. In Trading in the Zone, Mark Douglas writes, "The hard, cold reality of trading is that every trade has an uncertain outcome." But Absalom's brain refuses to accept uncertainty. To his survival instincts, uncertainty feels like danger. Over the next month, Absalom falls into a pattern. Trade 1. Exits at -$12. Misses plus $180. Trade 2. Exits at -$8. Misses $150. Trade 3. Exits at -$20. Misses $220. By trade 10, he's lost $140 in premature exits. But here's the kicker. If he had simply followed his plan, his 10 trades would have netted him plus $1,450. Then one night, something clicks. Absalom realizes that the consistency he seeks isn't in the markets. It's in his mind. He realized fear wasn't protecting him. Fear was his enemy, disguised as a friend. The traders who overcome this accept 5 fundamental truths. Anything can happen. You don't need to know what's going to happen next. Every moment is unique. There is a random distribution between wins and losses. An edge is just a higher probability of one thing happening over another. Armed with this knowledge, Absalom makes a new rule. He writes it on a sticky note and slaps it on his monitor. I trust my system over my feelings. His next trade triggers. The price moves against him. $10, $20, $30. His fear screams at him to exit. But this time, he breathes. He accepts the uncertainty. He remembers, this is just one trade in a series of 100. The trade hits his target, plus $200. 3 months later, Absalom's trading account tells a different story. Not because he found a better strategy, not because he bought a $2,000 course, but because he learned to manage the 6 inches between his ears. According to Dr. Brett Steenberger, a trading psychologist, 80% of trading success is psychological. Only 20% is strategy. Today, Absalom still feels fear. The difference, he doesn't let fear drive the car anymore. So the next time you're in a trade and fear whispers, "Get out," remember Absalom. Remember that fear is just your brain trying to protect you from uncertainty. But in trading, uncertainty isn't the enemy. Your inability to accept it is. Now here's my question for you. What's your biggest fear when you're in a trade? Is it the fear of losing money, the fear of being wrong, or something else entirely? Drop your answer in the comments below. And if this video helped you understand your own trading psychology better, share it with a fellow trader who needs to hear this. Thanks for watching. See you in the next one.